let me introduce our panel. Cesar Arias is General Director of Public Credit and National Treasury at the Ministry of Finance in Colombia. He's been in his job there for about 3.5 years. Before that, he was Chief Economist for Latin America at Deutsche Bank, and also worked at Fitch Ratings. And given that ratings is one of the topics that I think we'll try and cover, spend a few minutes on, Cesar, maybe you'll have a unique view on that. Can I just ask each of you what have been, I expect you'll just say fiscal, but what have been the lasting impacts of pandemic in your countries?
Well, thank you for the invitation, Chris. It's a pleasure to be so well rounded up with these distinguished panelists and with my former minister, Mauricio Cárdenas. So it's a pleasure to be here. I think we are very constructive and optimistic here in Colombia, because on the one hand, the pandemic was clearly the sharpest and deepest shock that the Colombian economy faced. But on the other hand, we're experiencing the most important recovery in our recent history in Colombia. And I'm gonna just mention two variables which are very important, and it's economic growth. Colombia contracted 7% during the pandemic, but last year printed a rate of growth of 10.6%. 10.6%. That's the fastest and the largest in a century. And more important than that is that with the 2 monthly prints of economic growth, January and February, we can now forecast that the Colombian economy is going to grow something between 7 to 8% in real terms in the first quarter of 2022. So Colombia grew 3 times faster than potential growth in 2021 and twice faster than potential growth in 2022. There was an objective that any economist in Colombia would hope to see, which was to close the output gap in Colombia. And I'm very pleased to see that before we leave office, Colombia has closed the output gap of the economy 24 months out in the pandemic. And on fiscal, yes, Colombia had to increase the debt burden by 15 percentage points from 50 to 65%. But we're also seeing already evidence that Colombia was able to reduce the debt burden by 1 percentage point in 2021 to 64%. And with the numbers that we have now, is going to be able to finish this year very close to 61%. And we have a new fiscal rule that we implemented, whereby our new debt anchor for the long term is 55% GDP.
And what's the timing on that? If there's a rule, is it fixed to a particular timetable?
Yes, 10 years, which is our fiscal financing planning, but we're doing half of the job in 2 years.
So 2 administrations, essentially.
Yes, but we're doing, again, half of the job in 2021 and 2022. So that gives credibility to that. So just to summarize, I think, what are the lessons learned from the pandemic? In our case, policy flexibility and coordination between the central bank and the fiscal authority. Second, institutionality. That works pretty well. And third, a permanent process of consultation with society.
Okay.
Society doesn't want to be governed. They want to co-govern. And that is very important as we approach the post-pandemic world and hopefully the next couple of years in the case of Colombia.
Cesar, I think you should run for office yourself. You convinced me, that's for sure. And you kind of echo, you said in a much more eloquent and technocratic way what the young Colombian I spoke to this morning said. Cesar, quantitative tightening is the new brilliant idea that somebody has come up with for central banks to wave a magic wand over the problem of wanting to control inflation whilst not wanting to put up interest rates. Have you looked at this phenomenon? Is it something that you understand? Do you understand the likely impacts of it? Is it a useful tool for controlling inflation? I'm talking about global inflation in, let's say, the US.
I think that the combination of rate adjustments, so moving the P, with quantitative adjustments in the United States is probably the most important risk for emerging markets. In Latin America, the rate conditions, or at least in Colombia, but I'm sure Mexico and others, we have a multiplier of 1 to 1. So the rate increases translate immediately, and sometimes it's more than 1. It could be 1.2, 1.3, it depends. So I understand the logic behind the combination of rate increases and quantitative tightening in the United States. I have nothing to say about that. It's their economy, but what I can tell you is that there is something that keeps us away to the 4 ladies and gentlemen that are here is probably that combination and its effects on markets. In Colombia, we have a different approach to fighting inflation. We have 3 tools. For demand side excess, the traditional tool of increasing interest rates, and that is happening. We're already 425 basis points into the normalization phase. But for supply side issues, we have deployed 2 important tools. First is tariff cuts. We reduced to 0 in 2 weeks, more than close to 300 trade items related to food or food inputs. And second, and is also important, we made the decision to smooth out the transmission from high energy prices to local gasoline prices, providing an implicit subsidy to gasoline consumers, both in 2021 and in 2022. So that combination is what, even with that, inflation is running at 8.5% year on year in Colombia. So without those measures, we'd probably be talking about double-digit inflation. So that's how we are fighting inflation again. But the good thing is that we have flexibility. Some other countries are, until now, going to Congress to do fuel subsidies and things like that. At the very least, we had the policies in place to be able to raise rates, reduce tariffs, and provide temporary subsidies on some particular staples.
Okay, thanks, Cesar. And Cesar, what's the hardest part of meeting those commitments in green bond targets? What is the hardest thing in the process from your point of view? Briefly, if you would, and then I have a follow-up question to you.
Well, there are 2 challenges. Many countries and almost all companies that are listed in the S&P 500 have made commitments to carbon neutrality by 2050. So the first thing that you need is money, is to bridge that financing gap between your commitment and the capacity to generate public and private resources to go there, what Herman was calling walk the talk. And for that, the good news is that thematic bonds, green taxonomies, are useful tools to mobilize resources. We estimate in Colombia that with our sovereign bond issuance program and the dynamism that green bonds are having in the private sector, we can bridge half of that funding gap if everything goes according to plan. And the second hurdle to deliver on those commitments is really project selection, scalability, and execution. In the case of Colombia, our best contribution to reducing emissions and adapting to climate change is, for example, arresting deforestation in the Amazon. And it's very difficult to do that in terms of land rights, in terms of security and patrolling of the areas, and so far and so on. So I will point out to do those two challenges. Again, one is resources, and two is project selection and execution. In Colombia, just to mention, we have 4 pillars for our ESG financing strategy. The first one is green bonds. The second one is green taxonomy, what I call a dictionary of what green is. And we launched that in the New York Stock Exchange 2 weeks ago, because it's not all about that. Secretary Janet Yellen said there is not enough public resources to make this transition. You need to attract also equity and investment from the private sector. The third is the incorporation of ESG criteria into public-private partnerships for infrastructure, something we're working on. And finally, carbon markets, the ability to convert Colombia into a net exporter of carbon credits to the world, to the corporate world, and some other states that are interested in the transition.
Okay, and Cesar, very quickly, sticking with you, all year the market's been waiting for you to issue in size from Colombia. There's said to be a $3 billion need. As it gets closer to the election, of course, we're not going to ask you the same questions that I asked Mauricio, but as the election is obviously in everybody's mind, what's holding you back?
When you were asking my colleagues about what is your financing and debt management strategy for this context, the first point in our agenda in Colombia is issue less. We have surprised markets by cutting our financing needs by 3 percentage points of GDP in February.
Good answer. Very good answer.
2, collect more taxes. Our tax collection is increasing year on year, January to April, at 34% nominal terms. So we have collected 1% of GDP in additional current revenue above our forecast. So the more we collect in taxes, the more flexibility we have to adapt our sources. 3, traditionally, Colombia proceeded first with the bonds and then with the multilaterals, because it requires more paperwork to do a multilateral loan than a single bond. This year, we changed the sequence. So we went first with the multilaterals so that we can have more degrees of freedom to observe the market and tap it when it's appropriate. And finally, we have put supply. We have already issued 35% of our local auction program with the benefit of protecting towards foreign exchange risk. And even though the costs are high, yes, that's for sure, and they are high probably in all the countries that we are talking here, but you have the benefit of specify your debt in issuance and in stock.
Very useful insight, Cesar. Thank you very much.